In today's video, I want to walk you through the entire application process for an SBA loan from A through Z. Hey everybody, welcome to my channel. I am your host, Leo Landaverde, business coach, commercial broker, and lender, helping you build business credit and get funding for your business. If you're ready to grow your business to 7 figures and beyond while creating the financial freedom and the lifestyle you want, then subscribe to my channel and don't forget to hit the bell and you'll be notified every Thursday when a new video comes out. All right, so let's get into it. The SBA application process goes through 3 phases or stages. One is the pre-approval stage. The next one is the underwriting stage, and the third and final is the closing stage. Now, in each stage, I'm going to tell you about how much time it takes. So to give you an idea, at the end, you're going to have an idea how long it takes the entire process. So, are you ready? So let's do it. Pre-approval phase. This is the phase where we're gathering documentation. Well, you should know that the SBA has minimum requirements as far as documentation is concerned. And I'm going to put it right here on the screen. So we're going to divide it into basically 2 different sections of information. One is the business section, and the other one is going to be the personal section of the application process. In the business section, we're going to have the project cost breakdown, aka what the money is for, the use of proceeds, or the business proposal, whatever you want to call it. Basically is how much you need and for what. Well, how much you need and what for. So in the business phase, we're evaluating, the SBA is evaluating the business entity itself and its ability to produce income. So for that, we're going to need 3 years business tax returns, interim financials. So if you're watching this video in 2021, so we're going to need the interim financials through the last month, fully reconciled, and we're going to need the tax returns for the prior 3 years. Whatever you gave the IRS. And we're gonna need the interim financials for the current fiscal year and a business debt schedule, right? On the personal side, as you can see on the screen here, you're gonna need 3 years of personal tax returns. You're gonna need a personal financial statement. The personal financial statement itself it's rather complex, so I would suggest that you really get somebody professional to help you with it because there's information coming from multiple sources and it has to jive with your personal and business. So it's basically a balance sheet and a personal income and a profit and loss for yourself, but tying your entire everything together in your net worth. So, and there are some SBA related forms that you need to be aware of. Generally, most of them will include the SBA form 1919 or which is the borrower information form. The form that is leading the documentation process. You're gonna need a statement of personal history, which is the SBA form 912. And you're gonna need the personal financial statement that I just talked about, which is the SBA form 413. Next phase is the underwriting approval and commitment letter. But before we get into that, there's one thing that I forgot to mention, how long it takes in this phase 1, which is the pre-approval stage. It can take anywhere from 0 to 30 days. And this really largely depends on your ability to produce the documents that the SBA is going to need through this lender to make sure that you gave everything and it has to be right the first time. So that's when a lot of people run into trouble because you don't have your financials ready, you haven't filed your tax return. So all those things you have to think about ahead of time. So, and it can take anywhere from 0 to 30 days. But if you have them all ready, it may be 1 day. If you're a startup or a small business looking to raise capital for your business but don't quite know how to get the funding that you need or put the business in a way so you can actually get business credit, I'd love to help you. I'm on a quest to help 10,000 small business owners get all the funding that they need. My email is right here. Reach out to me today. So the next stage is underwriting, approval, and commitment. And this phase can take anywhere from 10 to 14 days, depending on the lender that you work with and whether your documentation was ready to be seen. So here's the thing that you have to keep in mind from an underwriting perspective. All the lender is concerned about, the number one thing that you need to know about what the SBA is looking at is risk. What is the likelihood of your loan ending up as a default and then repossessing your business or your commercial real estate? That is the number one concern, and they're gonna spend their time looking through you and scrutinizing and really putting you under a magnifying glass. And the lender will critique through, so the SBA lender will critique every part of your personal and your business. Now, I forgot to mention to you that on the personal side of it, it's for anyone who owns 20% or more of the legal entity, 20% or more of membership in an LLC, or 20% or more shares in a corporation, whether it's S Corp, C Corp, right? If anybody owns 20% or more on either entity, you will have to provide personal financial statements and you will be tied to the loan. You will have to guarantee the loan as well. With that said, so here are some things that the lender will examine to your loan. Pay close attention, and I'm gonna put them on the screen as well. So your personal and business credit history. The bank will do a hard pull. I know that some lenders do a soft pull, and that may be great if you don't want a hard inquiry on your credit, but with the SBA, it will always be a hard pull, which means that it's gonna put an inquiry on your credit score. Now, here is for those of you who have a business that have actually taken the time to have business credit. If you have a Paydex score, if you have business credit, it will definitely give you the advantage. If you have a Paydex score or a FICO SBSS score of 80 plus, that will be huge. That's a feather to your cap. So they'll be looking at your personal and your business credit. They will also be looking at your personal and business debts. So if you have managed to build a credit history on your business, that report your business credit report will tell you whether there are any judgments, liens, or anything, any derogatories, so that'll save them time to realize that your business is credit worthy. They're also going to check on you and your personal side whether there's any of that. They're going to also verify the value of the collateral. Now, if this is a loan that has real estate as collateral, if you're actually purchasing a piece of commercial real estate, whether that is attached to a business that you're buying or that is you are moving in because you want to be your own landlord and you're going to occupy 51% of the space, there's going to be an appraisal done on that structure. So they're going to make sure that that collateral is sound and that can appraise for the amount of the loan that you're getting. So which another thing is, you have to be prepared to give some equity. So they're actually going to be looking at your source of funds, how much money in the bank, do you have cash reserves? And if you're looking at an SBA loan, it could be as little as 0 to 10% money down plus closing costs. So they're going to be looking at your ability to do that. If this content resonates with you, please do me a favor, like and comment on the video. The YouTube algorithm really helps me spread the word and reach more people that may need this content when you interact with it. Thank you in advance, and we thank you for your support. Now, here's another thing that is going to be very important. They call it cash flow analysis. The underwriting is going to basically underwriting for a loan consists of three major things: your credit worthiness and your business credit worthiness. That's number one, credit worthiness. Number two is your capacity to pay, and that is associated with a debt service coverage ratio, right? And other videos I talk in length, and you can actually watch the videos. I'm going to put the links on just commercial underwriting. Debt service coverage ratio means that your net income for your business has to exceed at least 25% of the principal and interest payments for your loan on an annualized basis. The simple math is, if your debt service, principal and interest, is $100,000 a year, your net income for your business has to be at least $125,000 to have a 25% margin for the bank to feel safe. So if you manage to do that, your business, it should be said that your business, before you get an SBA loan, should be profitable. Why? Because if your business is not profitable, well, that's going to be very hard for you to get approved unless you're a startup. If you're a startup buying a franchise, then the SBA is going to look at the track record of the franchisor as the likelihood of you becoming a default. So you may not necessarily be profitable. You may have zero because you haven't really started. But the debt service coverage ratio is a really big deal, right? And again, remember what I said. The number one thing that the SBA is concerned about is risk. What is the likelihood of you end up defaulting on the loan? That would not be good for anybody. And they're going to be looking at any tax or legal issues that you may have deal with. So they're evaluating, your character. So it's the credit worthiness, the capacity to pay back the loan, and the collateral. Those are the three main things that the SBA is going to be looking at. So the last stage is the loan closing. So I'm going to give you a checklist, and I'm going to put the checklist here that you need to be aware of. That as the final step, the SBA is going to be going through their own checklist to make sure that they have everything they need before they do the disbursements. So this stage can take anywhere from 5 days to 2 weeks. So as you've heard me talk throughout the video, so from beginning to end, from A to Z, from you turning in your application and finding your docs to you getting your wire for your funds, for your loan, it may take anywhere from 30 to 90 days. It may take 30 to 60 days. But the more ready you are for it, the sooner it will take. Okay, so here's the list. There is the SBA loan authorization. They want to make sure that they have all of these documents that I'm reading to you, the interim current year financial statements, the IRS transcripts, tax transcripts. So which means that you're going to sign a document, a form, I think it's form IRS 4506. I will double check that, make sure that that is in the notes, where you're actually given permission to the SBA to pull the IRS transcripts of your tax returns, whatever you gave the IRS, and they're going to compare to the tax returns that you gave them because to prevent fraud, making sure that whatever you gave them is the real thing. So they're going to have your resume and the resume of all of those involved in this venture. Business trend explanations is, if you have a business plan, it's going to tell the story. The use of proceeds, exactly what goes in, which is this, whatever it is that you give in the cost breakdown that I said earlier. The appraisals, if there is commercial or any type of appraisals involved, particularly commercial real estate, environmental reports, proof of insurance, corporate entity documents. Make sure that you're up to date with all of your filings. If your Secretary of State filings, make sure that you're not out of compliance with any of those, because the SBA will check everything. I mean everything. And if something is not right, that'll delay you closing the loan, if at all. Escrow company instructions, title company instruction, payoff letters. In case there are we paying any loans? Well, those payoffs letters will have to be already received. Down payment verification, aka equity injection from the borrowers. Now, as I said, depending on the strength of the collateral, the strength of your credit, and the strength of your business, and the higher the debt service coverage ratio, you may have to put very little down, maybe even 0% down. But at the very least, you're going to put 10% down on an SBA, whether it's a 7A or a 504 loan. Landlord documents if necessary. And there's a series of forms, the loan agreement, the note, borrower certification, SBA form 1050, which is the settlement sheet, the SBA form 147, the SBA form 148, which is unconditional guarantees, the SBA form 155, which is a standby creditors agreement, SBA form 1846, statement regarding lobbying, SBA form 601, agreement of compliance. So depending on where you are in the country, there may be some state-specific things, but don't worry, no matter where you are, the SBA, if your lender happens to be in New York and you are in Miami, they will send a notary to where you are to make sure that those documents that need to be notarized are notarized. So the SBA works across the country. So hopefully that was very, simple for you, and I'm glad I was able to help you. And this is everything that goes on. So just to recap, the 3 parts: pre-approval, underwriting, and closing. If you do all of this and you do it right, you're gonna be approved and you're gonna be able to get the loan. Thanks for letting me share. For a limited time, I am giving away 2 of my biggest resources, my Advanced Growth Plan template, as well as my Financial Projections Workbook. These 2 documents together have helped hundreds of business owners predict and achieve financial success in their business. Go ahead and click on the link below. They are my gift to you.